Hello everyone, Kim here from the Traders Club, TradersClub.com. I'm coming to you in midday. The market has been open, about 3 hours now, and we're currently looking at Spider. Obviously today is December 9th. About 3 hours has been passed after market open, and we're seeing some, we're seeing some lot of volatilities here. We're looking at Spider, S&P 500 Trust here, 65-minute chart. So we want to talk about, obviously we want to talk about kind of a, minor term sentiment. And we've been talking a lot about it the last couple of days. I've been tweeting it out. And obviously, as far as a minor term sentiment is concerned, we've seen a lot of up and down move here. You see all these moving averages. You're looking at this 65-minute chart. We've gotten above this moving average, poked out, came back inside. And in that process, what happened was actually, we actually cultivated lower high in the minor term, and we continue to cultivate lower highs here. What does that mean? We are cultivating minor term downtrend. Again, if you guys been following me on some of my market commentary last week, I've been talking a lot about primary term. If you've been following me my blog posts, I've been talking about major primary term uptrend and intermediate term uptrend. We are in an intermediate term uptrend and primary term uptrend. So right now though, we are talking about minor term downtrend, that we have lower highs here, right? So, as far as the minor term is concerned, the sentiment is bearish. Now that we're back below 10, 20, 50, all these moving average on this 65-minute. So it looks like we're taking out this lows as well as I speak. Right, so we do have this gap area right here. You see that gap area right there? We have filled that gap. Just keep that in mind though. Last time, this was back in November 17th or so, we had this gap. Same thing happened here. We got up, we came back down just straight through for about 2 days or so, and we filled this gap, right? And what did it? We actually saw this kind of a hammer-like candle. It's not a textbook hammer, but it has a certain properties of hammer there, with the kind of a long lower wick and the body, small body at the top on this candle. And that came with a pretty sizable, pretty decent. Actually, that's a pretty big spike of volume, the buying volume, right? And that's what did it. So obviously, when the gap gets filled, it acted support. And just acting as support is not enough. Well, we need to see some evidence that it is acting as support from the price action, right? We need to substantiate that potential support. So we saw that hammer with volume back in, what day was this? December 3rd, right? December 3rd, we saw that, and then the market got up very fast, and we failed to make new highs, right? This was a new high, 210-ish level. We need to get above that level for continuation. We failed to do that, and in that process, we created lower high there, and then we continue to create lower high currently. So now, as you can see, we have filled this gap. Keep in mind, this was the last hour of that day, right? So this was November 3rd, last hour. Okay, so I don't know if that's what's gonna happen last hour today, but I would at least give towards the end of the day and see that if we're gonna find some buyers in this vicinity, in this gap area. And also we need to see evidence that we may bounce, which means we want to see, if you're a buyer here, we want to see certain bullish reversal type of candle. Either bullish hammer is likely a candle there, or maybe a doji, some kind of a doji candle like this. Anything that suggests there could be some kind of potential bullish reversal candle. Right? If we can see that with the high buying volume, there's a potentially can bring it back up. However, with this downtrend resistance in the picture now, even though if it gets back up, it could potentially go up to create a lower high and continue lower there. So obviously, if you want this minor term sentiment to change, what we want to see as a buyer, we want to see this thing getting up and potentially meeting with this resistance, pulling back, retest this old resistance and new support, and then get up, get back up here, potentially pull back a little bit again, and then, so then in that process, what do? We're creating higher lows and higher highs, and then we would see potentially be, flipping back to minor term uptrend. That's what you want to see if you're a buyer. If you're a bear right now, if you want to continue to sell this and your target price is about 202, well, what you really want to see is obviously you want to see this 202 level or 205 level. Actually, let's do a band of support. 204.50 to about 205.50, right? 204.50, 205.50. You want this level to be broken. Okay, and obviously once it gets broken, you want to see a retest and a failure to about 202, because there could be some kind of a trap where it gets below that level of support and then this thing just goes straight back up and creates some kind of intermediate or some kind of invert head and shoulder. So you see, there could be a lot of traps and things like that. That's why these retests and looking at certain levels is very, very important. That's why technical analysis is very, very important if you're looking at these pivot levels and levels that, you can use it as a reference point. So you can gauge your trades there. So obviously, in my analysis on the S&P 500. Actually, before I kind of wrap it up on the S&P or summarize it, recap it, I want to look at daily chart. We're looking at 65-minute chart. Now we're looking at daily chart of S&P 500 spider here, right? So we're looking at certain, oscillators here. We've got MACD, RSI, and stochastic. So obviously, what I was talking about as far as the intermediate term is concerned, because we just looked at minor term on the 65-minute chart. What I was talking about intermediate term is this: we are still cultivating higher lows and potentially higher highs there, right? So we have intermediate term uptrend cultivation. So I mean, even if we pull back, we are still in the level of potentially be at the level of a higher low. Again, if you want this intermediate term, uptrend to be broken, if you're a bear, you really want this to be below 200. So I mean, we're not there yet. We're at 205. So let's not talk about that right now. Let's talk about that when we get there. But as far as sentiment is concerned, you can see that the MACD, the fast line's coming down, RSI is also sloping down, and stochastic is also coming down here. So this means that we are still seeing a bearish pressure, which could potentially be a tail that we may come back to, potentially this level here if we lose the level we just talked about, 204.50 and 205.50, right? If we lose 204.50, 205.50, potentially we come back down to about 202 level. But keep in mind, 202 level is a very, very strong pivot level. It has been served as a strong pivot in the past. You can see that this was strong support back here, it was strong resistance back here, and then it was congestion zone here, and then it was strong support there, right? So we have to keep that in mind. We have to give respect. Again, what I'm saying is, as far as the intermediate term is concerned, as long as we're above 201, benefit of doubt goes to the buyers, as long as we're above 201 in the minor or in the intermediate term. But in the minor term, benefit of the doubt goes to bears because of the correction or because of the cultivation of a resistance here and a downtrend. And we're already seeing a little bit of a bounce here on the 65-minute chart. So it will be interesting to see how it deals with this support, because it is a strong support. It is a strong support level. If I threw a Fibonacci on this, I tweeted this out last night on my Twitter and StockTwits. If I just threw a Fibonacci here, you can see that we're just hanging out at that last level of Fibonacci, okay? Don't be so obsessive with the, precise level of Fibonacci. It's the vicinity that's important, right? Last time, when this thing came down, we actually gotten slightly below the last level of Fibonacci, right? Which was a 61.8%. Well, don't worry about this number here. It's flipped. 61.8% retracement. It's the vicinity that is important, and it's the vicinity of this level right here. So we're just flirting with that last level of support, or the Fibonacci level support that coinciding with last level support that has been acting as support here, here, and here, and which is also the gap fill area. So it's interesting. It will be interesting to see how we close today, and then possibly see what could happen next day or two or so, and then we'll go from there. I'll look at Apple here, and then we'll call it a day. Looking at a 65-minute chart here. looks like we're going to reestablish this downtrend resistance here. Let's do that. So we have this downtrend resistance, and we also have this uptrend support. We talked about this level here. I know you might be asking me, if you watched my last video, you probably understand why I drew it this way. But if you go to line chart, you can see that how it has been perfectly retested. Line chart, just what he's saying is line chart is line chart does not it does not recognize intraday fluctuations. What it does is obviously we're looking at 65-minute chart here. So every hour when the hour is done or our hour is finished, after that 1 hour, it's just going to remember that dot. So that's how the line chart works. And the candlesticks obviously is going to remember the fluctuation of that whole hour. If you are looking at daily chart, weekly chart, it's imperative that you also look at candle chart and line chart, especially when you're looking at Apple, because Apple loves to respect the line chart more than candle, because most investors and traders tends to remember back of their head the closing price rather than the fluctuations, right? So looking at Apple here, let's go to the 65-minute chart here. Obviously, let's go back 65-minute chart. Looking at a line chart here, this level is a strong support. You agree with me on that? That's a strong support there. So this is a level you definitely want to see. If you're a buyer here, you definitely want to see getting held, right, and getting respected. And what does that mean? We still have higher lows happening here, right? We have a higher lows going on in the more of an intermediate term. So we means that we have kind of a intermediate term uptrend type of cultivation happening. But you may say, well, okay, there's a lower highs going on. Yes, I agree with you, right? That's kind of same thing as what we saw here, right? We got the lower highs here, right? We did have a lower highs here while cultivating higher low. So at that point, when that happens, what you want to see, when you kind of start seeing these kind of a triangle type of price action, what you want to see is which way it breaks before you just guessing it. People always want to guess it, and people want to just predict things. React to it once we start to see certain substantiation from the price action, right? So we saw that, we broken out of that, and then we retested it, and then we continued higher, right? And then it fell back, but then now it looks like we're cultivating another this type of reaction here, right? This type of action right here, right? We're cultivating another action like that. But keep in mind, this is higher high, looking at more of an intermediate term. We got the high, we got the high there. Intermediate term, we are cultivating, uptrend, right? We got the highs, higher lows. But minor term, what do we have? We have lower highs going on there. So we have minor term bearish sentiment. Though we don't have lower lows yet, we have a higher lows. So again, it will be interesting to see towards the end of the day how it deals with this vicinity there, right? If we find some support there, it is likely they can get back up here and then kind of hang around here and see which way it breaks, right? And obviously, what you want to see as far as the price action is concerned, if you're a buyer here, you want to see this thing possibly getting up, coming down, and then in this way we start to cultivate what? Higher highs in the minor term and then higher lows in a minor term, which means that we'll get into some kind of a minor term uptrend there, right? And as far as the bearish action is concerned, if you're a bear, you want to see something like this. That way we got the lower highs and lower lows, right? So I think, instead of just guessing it, that's what's going to happen. Like, instead of guessing it at this point, hey, that's what I think, that's what's going to happen like this. Or, hey, I think this is what's going to happen like that. Instead of guessing that, I think it's best that we let the charts, dictate that possible move and let the chart, indicate or signal us that that's what's going to happen. Obviously, I still think that 120, 121, 120.90-ish, we have a gap that hasn't fully filled here. I think above that level, I do believe that buyers is going to come back intermediate term and kind of bring it back up here once we clear this level of 123. So obviously we're kind of far from it. I think, as far as important level for Apple is this level here, 113. This is a level that Apple needs to clear. And we got another, so we have many supports for Apple. So you can see that. So any shorts out there or put holders, I mean, I would really, I wouldn't be too long term with that because so many support levels that you have to deal with here, right? And again, we're back at the support right now, which is a rising uptrend support, which is very, very strong. So I think my stance on the Apple, my analysis on the Apple is that minor term we have the bearish sentiment, obviously with the market shaking, but the intermediate term we're still in the we're still in this intermediate uptrend cultivation phase, right? So benefit of the doubt, I believe, goes to buyers. I mean, again, Apple has a lot of fear. There's a lot of fear in the Apple. It's also the market as well. With after this kind of decline, there's a lot of people are still fearing the market. So I mean, we're still not in the public participation phase here. We may be in some kind of accumulation phase. That's what we haven't really moved well. But looking at daily chart now on the Apple, and I'll close the video with this, that you can see on these oscillators. This is how you look at your oscillators, is that when the oscillators start to move sideways a little bit, especially MACD, it's just really indecisive. We're just you're not sure which way it's going to move. It's going to go higher or lower, right? We don't know that yet, so it's just kind of telling us that we're just kind of in this indecisive move, especially when we're looking at MACD. So again, that's what I was saying, that before just guessing it, let's wait and see which way it goes. Looking at RSI here, we're kind of like range bound, right? We got resistance there, we got support there. It could get stuck here for a little bit. What that means is, again, we're range bound. We don't know where it's going, where it's indecisive. We see stuff like that happening right here. We're range bound there, we're range bound here. So it's not something new. The Apple does tend to do these range bound type of move, and then it makes decision, right? Again, you can see stochastic is slightly, coming down here. You can see that we have, fast line coming down a little bit. That means we got minor term bearish pressure coming in, and which we already knew that's what was happening. You can see that, on this daily chart, 3 days, we're slowly coming down, and that's exactly what stochastic is, implying. Articulating that's what we're seeing. So it's not we don't have a whole lot of this secret that that is telling us in these oscillators. Also just in reflecting on what the price action is doing. So I think this is a level that we need to watch and see how it plays out next few more days, and then we'll go from there. Have a great day.